On June 12, 2026, a company pulled off the biggest stock market debut in history. It raised about $75 billion at a valuation near $1.8 trillion. It priced at $135 a share and popped 19% on day one. That company, of course, is SpaceX. But here's the question almost nobody's really asking. Is a rocket company actually worth nearly $2 trillion? To answer that, you have to understand something weird. SpaceX isn't really a rocket company anymore. It's actually three very different businesses stacked into one. Rockets, satellite internet, and now, artificial intelligence. And the part that makes most of the money might surprise you. It is not the rockets. Meet Starlink, SpaceX's satellite internet service. A network of thousands of small satellites beaming internet down to almost anywhere on Earth. And it is growing like crazy. At the end of 2024, it had 4.6 million customers. By early 2026, over 10.3 million, across 155 countries. Last year, Starlink brought in $11.4 billion. That is 61% of all of SpaceX's revenue. And last quarter, it was nearly 70%. Here's the kicker. Out of all three businesses, Starlink is the only one that actually turns a profit, with margins above 60%. This is the cash machine funding everything else. So if Starlink is the cash cow, what exactly are the famous rockets doing? This is the business everyone pictures. The Falcon 9 rocket. And in 2025, SpaceX launched 165 times. A world record for the sixth year in a row. But here's the twist that tells you everything. Of those 165 launches, only 43 were for paying customers. 3 out of every 4 launches were SpaceX launching its own Starlink satellites. The rocket company's biggest customer is itself. So the launch business brought in about $4 billion, growing just 8%. Next to Starlink, it's the slow lane. But it is still a fortress. Nobody else on Earth can launch this much, this cheaply. That monopoly is the moat that makes Starlink possible in the first place. And the future is even bigger. Starship, a rocket built to carry over 200 tons to orbit, the equal of 10 Falcon 9s at once, for under $100 a kilo. If it works. Now here's where it gets strange. In early 2026, this rocket company bought an artificial intelligence company, Elon Musk's xAI, and the social network X, formerly Twitter. It's all now one AI division branded SpaceX AI, home of the Grok chatbot. So a rocket maker suddenly owns a social network and a frontier AI lab. On paper, AI adds about 17% of revenue. But there is a giant catch. That AI segment is burning through cash. Roughly $12 billion a year, against only a small fraction of that in sales. It's a moonshot bolted onto a rocket company. So let's add it all up. In 2025, SpaceX did $18.7 billion in revenue, up 33%. Impressive growth. But it also lost nearly $5 billion on the bottom line, because it is pouring everything into Starship and AI. Now the scary part. At $1.77 trillion, the stock trades at about 95 times its sales. A normal, healthy company trades around 3 to 5 times sales. SpaceX is priced at nearly 20 times that. You are not paying for today. You are paying for a future that has to go perfectly. So the bull case. Starlink is a profit machine still doubling its customers. The launch monopoly is unbreakable. Starship could 10x the whole business. And the AI bet is free optionality. It's the most vertically integrated company in the world. It builds the rockets, launches the satellites, and sells the internet, all in-house. Now the bear case. Almost everything rides on Starlink. If that one engine stumbles, the whole story cracks. And Starlink has a new rival with deep pockets. Amazon's Project Kuiper, $10 billion committed, plus Amazon's Prime Reach and Cloud Muscle, aimed straight at Starlink. Add the AI cash furnace, an improving Starship, and heavy reliance on one famously busy founder, and you've got real risk under that trillion-dollar price tag. So here's the honest takeaway. When you buy SpaceX, you are not buying a rocket company. You are buying a bet. A bet that Starlink keeps compounding, that Starship actually works, and that the AI gamble pays off. All at the same time. All priced as if they already have. So, is a company growing this fast really worth 95 times its sales? The technology is real. The price is the question. That part is up to you. That's the breakdown. This is not financial advice, just the numbers. If it helped, subscribe, and go watch the 60-second version. This has been Stick Figure Finance.